Welcome back to the channel, guys. So in today's video, we'll be taking a look at Meta. Now, Meta is the latest position in the portfolio. It's currently a 9% position as of today, and I started buying into this position around end of January this year. So in today's video, as usual, we'll take a look at the latest report. Then differently this time, we'll take a quick look at the business. I think it'll help understand the thesis behind Meta. And then we'll also take a look at the MOAT and the risks. And then finally, as usual again, we'll look at the valuation. So without further ado, let's jump straight in. So taking a look at the Q4 report, Meta did beat on expectations. They beat on revenue and EPS. Looking at the highlights here, their family daily active people came in at 3.58 billion on average in December 2025, which is an increase of 7% year over year. And something that I found interesting as well, this was in a Morningstar report. So they say here, for context, according to various estimates, a little more than 5 billion people in the world have access to the internet, implying that around 75% of people connected to the internet globally are users of Meta's applications. So it really kind of puts things into perspective that around 5 billion people have access to the internet, and Meta has the majority of those people accessing their applications daily. That's a big moat right there. Moving on to the next highlight, their ad impressions. They delivered an increase of 18% for the quarter and 12% year over year for ad impressions. The average price of an ad has also increased, so it was 6% for the quarter and 9% year over year, which is good to see. Revenue, which increased by 24% for the quarter and 22% year over year. It came in at 59 billion for the quarter and then 200 billion for the year. Very good increase there, and they also, we'll see later on, they've increased guidance as well for the revenue. In terms of cost and expenses, their total costs and expenses were 35 billion for the quarter and 117 billion for the year, representing an increase of 40% and 24% respectively. And then their capital expenditures, including principal payments on finance leases, were 22 billion for the quarter and 72 billion for the year. In terms of their capital return program, they repurchased 26 billion worth of shares in the year, and they didn't repurchase anything in the latest quarter. And then their total dividend and dividend equivalent payments were at 1.34 billion for the quarter and 5.3 billion for the year. Their cash equivalents and marketable securities came in at 81 billion for the year. And then the cash flow from operating activities was 36 billion for the quarter and 115 billion for the year. And then free cash flow came in at 14 billion for the quarter and 43 billion for the year as well. Finally, long-term debt was 58 billion for the year. So overall, a good report. They increased on revenue quite a bit, and we'll see in the guidance later on that they have increased guidance on revenue as well. Their ad impressions are going up, their daily active users are going up, all good things for Meta there. Looking at the outlook commentary, so they did increase guidance above analyst expectations. So they expect revenue for the first quarter of 2026 to be in the range of 53 billion to 56 billion. And then their total expenses for the year, they expect it to be between 162 to 169 billion. And then most of that is capital expenditure. So they say here that they're building out their infrastructure, so to support their super intelligence labs and their AI build out. So that's where most of the capex will be. And then they do also have some comments on regulatory things that are going on. They say here, finally, we recently aligned with the European Commission on further changes to our less personalized ads offering, which we will begin rolling out this quarter. However, we continue to monitor legal and regulatory headwinds in the EU and US that could significantly impact our business and financial results. For example, we continue to see scrutiny on youth-related issues and have a number of trials scheduled for this year in the US, which may ultimately result in material loss. So there's still outstanding regulatory things with Meta, and this usually is the case with them, that could cause them to have significant settlements in the billions, as has happened before. So it's something to know with investing in Meta as well. Moving on to the business, so I thought it'd be good to give an overview of Meta's business for understanding the case for Meta. So Meta can essentially be split into two businesses: their family of apps, which is all their social media apps, including Instagram, Facebook, Messenger, WhatsApp, etc. And then their Reality Labs part of the business, which focuses on the metaverse, AR, VR, and wearables as well, as of recent with the Meta glasses. And then we have the thing that kind of supports them now, which they're trying to build out, which is Super Intelligence Labs. This is the part of the business that's focused on AI. And then they have their Meta Compute, which is the infrastructure that will support their AI build out. So essentially, Meta's business focuses on generating revenue through the family of apps, through the ads that are on those platforms. And then Reality Labs is really their bet on hardware. So they really want to avoid, if say the next iPhone type of hardware comes out, they want to get ahead of that and not be paying Apple, for example. They pay Apple a lot of money to just exist on the App Store. And then finally, their Super Intelligence Labs is the thing that will support both these businesses. So in terms of the family of apps, it will be for increasing ad revenue on there, and we're seeing that play out in the revenue right now with Meta. And also will be to help advertisers better advertise on their platforms, increase ad impressions through better targeted ads there. And then in terms of Reality Labs, the AI will help support things like their wearable glasses, using AI within that. And then the reason for the aggressive infrastructure build out would be so that Meta wouldn't have to be reliant on other cloud providers and would be more self-sufficient. So with that, let's move on to the moat and risks of Meta. So Meta has a large moat stemming from the amount of people on their apps. This creates network effects where the amount of people attracts more people and makes it harder for people to switch to other apps. They also have unique data working for them. So with the amount of people on their apps, they have a lot of data on those people, which makes them attractive for advertisers, and they can better advertise to individual people as well. And then the compute moat, this is what they're trying to build out right now with their infrastructure build out. So this moat will stem from having the infrastructure that no one else will have, and will make it harder for competitors to penetrate the space. In terms of risks, Meta faces regulatory risk all the time. So we saw them highlight that in their Q4 report. They're always at risk of a big settlement, so that's something to note when investing in Meta. And their capital expenditure risk, this one's the one that's on the market's mind the most, let's say. So the market isn't sure if there's going to be a valid return on ROI on their capital expenditure right now. So that's why the stock is really trading down. And then their Reality Labs losses is a risk. So they continue to kind of burn money on Reality Labs through their VR, AR, and glasses or wearables. So that part of the business has been loss leading for a while and will continue to be so likely in the future, but the reward might end up being worth the cost, so they will continue spending there. Okay, so moving on to my favorite part, the valuation. So we'll look at the analyst estimates for Meta for the next couple of years. If you're wondering where I'm getting this information, this is from Interactive Brokers. They have some analyst forecasts that you can see there. So in terms of forecasts, in terms of EPS per share for Meta, the average analyst expects it to be at around $59 in the year 2030. And then in terms of revenue, the average analyst expects it to be at $440 billion by 2030. So we'll use these numbers in our DCF calculation. The revenue increase comes out to about 18% year over year. If we boil that down to the EPS and we assume it ends up being similar, 18% here on the DCF calculator on Qualtrim, and then we'll go with a 30 PE, we can see that the stock price can end up being almost 1,600 by the year 2031, and the an average entry price of $772 would give us a 19% return. So if we're using that as our base case, if we lower our expectations a bit, so let's go with 25% EPS, we can see the stock price can go all the way up to 1,300, which is still a really good return by the year 2031. So what's the verdict on Meta? I think it's a buy right now. They have a strong moat with the amount of people on their apps, with their daily active people. They're growing revenue, or they're even expected to grow revenue in the high teens to the mid 20s for the next couple of years. And their valuation looks very attractive with a trailing PE of 27, next 12 months PE of 22, and a 2027 PE of only 18. So I think it's a good buy at this moment. And that's it for the video. So thanks for watching, and hopefully I'll see you in the next one.